Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade, wrapping up the week, looking at Friday's session and more. Pleased to have with us here today our good friend Jim McCormick with agmarket.net. Jim, good to talk with you again, sir. Hope you're doing well.
I'm doing well, Jesse. Thanks for having me on.
Well, Jim, I appreciate the time. Let's dive in and just a 1,000-foot view here before we dive into some other topics I want to get to today. Looking at Friday's trade, wrapping up the week, obviously we had the Fed news, the stock market pulled back quite a bit. That was kind of a backdrop to the commodity trade that overall kind of just felt choppy, quiet, kind of getting that holiday malaise type of feel into these markets, it appears, Jim.
I think you nailed it. We are definitely moving into holiday mode, maybe a little bit earlier than normal, due to the fact that we do have a full week of trading next week before we have the long holiday weekends. But, the reality is, Jesse, it's been a very volatile movement market this year. I mean, a lot of extremes, a lot of Sunday night market surging to fail Monday, vice versa. I think it's really kind of worn a trade out right now. And I think a lot of producers and just traders, day traders, long-term traders are just stepping aside and just kind of winding down for the holidays. And then I think we'll ramp it right back up as we come back in after the holidays for that big January crop report.
Definitely. Real quick, thoughts on the Fed move? I know it was as expected, but then the stock market, big drop, big sell-off and pressure there the last couple of days of the week, and then the dollar coming back. Any thoughts regarding that and how it's maybe impacted commodities, livestock as a whole here, Jim?
Well, just briefly on the Fed move itself, it was pretty much came in as advertised. They raised it about a half point. But I think the biggest thing we need to take away from the Fed, and it seemed to maybe take a day or two for the market to kind of realize what the Fed is actually telling us, Jesse. But what they really said was, hey, look, our goal right now is to kill off inflation. And I think they kind of set the tone that it may take longer than people think. And because the rhetoric going into the Fed meeting wasn't, well, they're going to raise the interest rate, but how quick are they going to do the quote unquote Fed pivot, which means essentially lowering the interest rates? Because the fear is, if you look historically, Jesse, when they start raising interest rates, they get to the peak and within 6 months, they start lowering the interest rates as they start bringing the economy back down. When you look what Volcker did back in the 80s, it went crazy, but it didn't stay at that 18, 19% forever. It came back relatively quick. Well, what Powell told the market this week was, hey, this is probably going to take longer than you guys think. And now all of a sudden, some of that trade that was buying the idea of a quicker pivot is now kind of running from the doors. Now, what's going to happen for you producers, it's going to essentially cost the money to borrow this operating note. It's going to get more expensive. So next year's crop's going to be a little bit more expensive. Cost of credit card debt's going to get more expensive, and that's going to be maybe a little bit of a drag on the protein market. If you look at the overall supply situation, we're looking for the cattle supply to continue to tighten into 2023. A lot of people are looking on this hogs and pig report next week to also show the overall protein supply for pork to start to tighten. So really what it's going to be, Jesse, I believe, as we get into 2023, it's going to be a supply versus demand argument. We know the supply is going to drop. The question just is the demand there to pay for these higher prices that you traditionally get when you get these, drop in supplies? And that is yet to be determined. And I think if you're a producer, you got to be a little bit cautious of it, because 9 out of 10 economists seem to think the reality is we're probably, unfortunately, going to go into recession. And when you see recession, you see people being laid off. People start getting laid off. People tend to pull back their spending. We saw that earlier this week as well on a survey of consumer spending for the month of November at the beginning of the holiday season. And those numbers were a little bit disappointing, which shows me that the market is definitely, or the public in general, is getting a little bit concerned about their paychecks and their savings. And like I said, that could have a negative impact on the protein demand.
Well, it could definitely have a negative impact on that protein demand, as you mentioned. And since we're on the topic of livestock, wrap it up on Friday. it felt like a fairly decent day, and cattle hogs really had a solid day there. But overall, this protein sector, you hit on a lot of great points. It just feels like with protein, with cattle hogs, we're watching that export demand as well, but we're also kind of watching, especially cattle country, where it's just been we've kind of just been waiting. It feels like, Jim, we've been waiting for this breakout to the upside as the herd shrinks. And I think that's something maybe to watch here as we get into 2023 a little bit more. Doesn't feel like that breakout move is going to come in the next couple of weeks.
I think so. Part of it's a holiday season. Part of it, I think people are going to wait and see how the consumer feels and spends coming out of it. And I think part of it, at least on the hogs, a little bit. Now, the market rallied toward the end of this week quite sharply. I think that had to do with the market a little bit oversold technically and this bitter cold weather coming in and maybe a little bit of anticipation of that report. But I think near term on the pork industry and even the beef side is China. I know we've talked a lot about it, but China has gone from zero COVID, in my opinion, to 100 miles an hour. They have kind of just opened up the floodgates and just said, go at it. And with that, they are seeing a huge increase in COVID around the country, especially the big cities. Some of the bigger cities, they say, are just as isolated now as they were in the heart of COVID when they were locking it down because so many people are getting sick. There's talk of trade desk volume down dramatically in China simply because they don't have the traders to actually, execute the trades. So you're going to get a little bit of pain, I think, near term. And my guess is, Jesse, it's going to last into January because my belief is you're hitting the big cities right now, kind of like it did at the beginning of COVID here in the United States. Because U.S., we had some lockdowns, but we never did the lockdowns like China did. So my guess is, Jesse, the big cities are going to get hit over the next couple of weeks. And then they always have that big Chinese New Year at the end of January when essentially by some accounts, it's some of the biggest humanity change movements that we'll ever see when millions upon millions of Chinese leave the cities to go back to their rural villages they're from to celebrate the holidays. So my guess is the cities will get hit hard at this time of year. At the end of January, you're going to see rural China get pretty hard with COVID. And then, 6 weeks after that, just like what happened to our Omicron surges, that tide's going to start coming back down. And then I think you're going to see the government spending really start to go to try to bring that economy back to life. And that may be when we start seeing a little bit better demand potentially on the export side for both the pork and the beef. And that's when we might finally see the breakout. So it may take a little bit of time. But like I said, if you look at the history of what's happened in Europe, in the United States, you get these big waves of COVID, the waves crest, and then it moves to the sidelines and the world moves on. China hasn't done it yet. They're in that process. It's going to be tough for them, but eventually, hopefully, it'll be bullish for them and bullish for us.
Well, speaking of China, an interesting thing I saw this week, and you may have saw it as well, and correct me if I'm wrong if I say this incorrectly, but I saw a note about China. I think it was a Reuters report allowing foreign investors to participate in their soybean meal markets now as of the 26th, I believe, coming up here on the Dalian Exchange. And I think a move like that just goes to show, some of the changing of the ebb and flow of global trade and markets and how important China really has become on a global stage here, say the last, 10 years, Jim. I thought that was an interesting note that I saw.
Well, there's no doubt about it. It is kind of interesting to see that. And that just shows you while China is kind of diversifying, especially in the meal side of the equation. And China's traditionally has always been just a big importer of beans and not the raw product. I think you're going to start seeing them import more raw product. And Jesse, I think that's good. Because if you look at where the United States is going with this biodiesel, this renewable diesel, which I think if you're a producer of beans, you have to be very, very excited about. Because what's going to happen is that's going to ramp up our domestic demand for bean oil. And that could come at a cost of a little bit of excess supply of meal. Now, granted, if you're an end user of meal, you're going to be kind of happy of that excess supply potentially, which could kind of tap down the prices. But, the producers of that biodiesel meal, they're going to be looking for an extra markets. And if the Chinese start buying our meal, that's going to do wonders for us because I do think we're going to lose a little bit of export demand from the Chinese. I think what you're going to see in general is a shift of China buys more and more raw beans from the Brazilians. They may buy some meal from us. And then, like I said, domestically, we'll be pricing our beans essentially or turning them into, biodiesel.
Jim McCormick, agmarket.net, is our guest here today. Jim, a little more on the grain side. Soybeans feels like we keep going up and testing overhead resistance, coming back off of it, then finding buyers there. Meantime, quarter wheat feels like they're working them a little more together. It feels like we go down, test the bottom end of support, and then bounce off of that. And we just kind of keep staying within these trading ranges here heading to the end of the year. It's kind of the dynamic and the feeling that I get as we're working towards Christmas. What are your thoughts just on those thoughts here for the grain trade right now?
Well, I think you nailed it. I think one thing you got to look at, Jesse, is look how the trade's going to spread activity. We've noticed it all falling into the wintertime. The beans will be up, the corn and wheat will be down. Corn and wheat will be up, and then the beans will be down. So you're seeing a lot of commodities spreading going on. The bean market in general, I think when you get up near $14 beans on the new crop, up near 15 on the old crop, you're going to find people wanting to sell beans. And I would encourage that. I mean, I am a little bit leery that China's getting ready to make that pivot to South America and aggressively. We're hearing estimates up to 75% of China's needs have been covered for January and February. So by the time they start covering March, they will have that fresh Brazilian supply. So that's going to keep us in the market. But we're still, then people say, well, why isn't the market falling out of bed? That's because Argentina continues to deal with a drought situation. So we break, and then the drought buyers, essentially come in and buy that dip, and then we rally. And then the people looking to sell product on the idea that Brazil's going to have a big crop, offsetting the Argentina drought. And that just kind of keeps us in the range. The corn and the wheat right now, what we're watching for is demand specifically. They've been very expensive on the world market in general for the last few months. We're not getting a whole lot of exports. Wheat is finally getting a little bit competitively priced. The corn, we're still not competitively priced, but we're getting closer. And, I think you're going to see some of that demand shift from us. If Argentina continues to be dry, that will bring demand back to the United States, I got to believe. And the one wild card also is what's going on in the Ukraine right now. Remember, Jesse, the train corridor is open. But when you look at what's going on with Putin seems like he's kind of lost the war at this point. So now he's essentially declared war on the public, the population, and he's destroying their infrastructure. And it becomes a problem logistically. If you can't have power to get grain out of your silos and out of your farm to the export market and get that, to those elevators onto the ships, it's probably going to limit the ability of the Ukrainians to get that grain out of the country, which also maybe opens the door for more exports. Right now, interesting enough, there's about 9 million metric tons of corn that's still in the field in the Ukraine right now. And they're getting a big snowstorm as we speak. So we know we're going to lose some bushels there, and quality is also going to be an issue. So there is some time for some demand to come into these markets. And that's really what we're going to really need to see, I believe, to get the corn and wheat market somewhat into a bull market.
Well, thinking as well, Jim, talking a little risk management here, and this time of year with the quietness in the market, sometimes if we get a low volatility or low volume day, I should say, it could lend itself to some volatility. So what are your thoughts on producers if they're looking at some different targets? Should they get some of those quote unquote wish orders out into the market here as we head to the end of the year in case something wild happens on a day-to-day basis?
No doubt about it, Jesse. I think you've made a great point. If you are a producer out there, and if there's a certain price level you want, be it 5 cents, 10 cents, 20 cents above the market, get it working with your broker, or at least get it working if it's a cash sale with your elevator. Get it working, because in these thin markets, the next 2 weeks as we wrap up, a lot of people don't trade, but there are a few funds that do trade. And when those funds come in and place big orders in the market, they will move the market potentially, and you may catch a blip up in the marketplace real quick, just as they, because the computers trade a headline out of the Ukraine, a headline out of South America. You might be able to get a sale that you're normally not going to catch because you're busy, with Christmas time, holidays, visiting with family. You might be able to get a lucky trade, a trade point off you want. So yes, definitely get those orders working.
Well, and I think a thing with that as well is that if you put some of those orders out there, if it does happen, maybe, don't be upset that it happened. I know sometimes the psyche out there in farm country, I mean, it just happens. They say, oh, well, it got to 7. I want it to go to 750, that kind of thing. Pencil in those margins, those profits, and take them if they come to you. I think that's a big thing to remember as well, Jim.
Oh, I think you nailed it. I mean, right now, Jesse, I think, the key is not look at the price. Is it, don't worry about $7 corn. Look at your break evens, folks. Are you making money? What's your profitability level? What did you think your profitability when you were getting ready to plant this crop 9 months ago? And we're going to encourage you to be a little bit more aggressive. Our group is definitely a little bit leery about the beans. We're telling people, get rid of the old crop beans. You're looking at some fabulous prices historically, and essentially right now, if you're holding on to beans, you're just betting on the Chinese to continue and buy U.S. beans. And I don't know about you, Jesse, but I'm very nervous when I've got to count on the Chinese to be the one that's going to propel the market this time of year. Because like I said, the Brazil harvest overall is going to come down that pipeline very, very quick if you want to play the what if. And I know there's a big what if out there. When you look at that drought monitor, it is very, very dry right now. So, that's where the options come into play. You can always re-own using the market options to way to maybe play the what if in case we do stay dry. I am very leery about where the economy is going to go as we go into 2023. And I think that could become a real problem. I mean, the worst case scenario for a producer right now, when you think about it, Jesse, is he's spent a lot of money getting ready to put in this 23 crop. A lot of high fuel costs have been locked in, no doubt. Fertilizer prices, seed prices, they all are up due to this inflationary pressure. Okay, if Brazil ends up with a big crop, we follow up with a decent crop this summer, and then on top of it, you throw down a slowing economy due to the Fed raising interest rates, which 9 out of 10 economists think we will go into a recession. Just how big of a recession? So you've got demand not just dropping potentially in the United States, but the rest of the world, a supply situation growing. When you think about it, you probably got $1 to $2 downward risk in the beans, at least $1 downward risk in the corn. And if you're a producer out there, you got to ask yourself, am I willing to take that risk, or do I start really getting aggressive on a marketing program that says, I'm going to make sure I make money in 2023? And I think it's very critical you guys make money in 23, because if we have a downdraft in pricing in 23, the odds are 24 is going to be even worse. And 24 could be a situation where you can't even it's a negative cash flow. So it's very important that you market the crop in the bin as well as the crop you're getting ready to plant and make sure that profitability is there, I believe.
That's a great point that you brought up, and I was going to get to that, so I'm glad you led me there. Thinking about this 23 crop, and you mentioned it, if we've already booked inputs, booked fuel, etc., there's no harm in getting some sales on the books there to try and lock in some of that profit that you alluded to, Jim. I mean, it's so important to think about that, is that if you have made sales and you have stuff on the books, you got to protect that. That's just smart risk management, Jim.
Well, exactly. I mean, the one thing is interesting. I've been doing this in this industry almost 25 years now. Farmers, our industry tries to, swing for the fences, try to get the maximum. A lot of other industries, when you think about it, it doesn't matter if it's a widget, if it's making soup, if it's making a shovel, whatever it is, they're looking for a profit margin, 5%, 10%, 20% return on their investment. I think as you're a producer this year, you've got to kind of take that businessman approach and don't necessarily swing for the fences this year. Make sure that profitability is locked in, because we're in an economic situation, plain and simple, we've never been in. I mean, we've got an interest rate interest rates going up as we're fighting inflation that we haven't seen since the early 80s. You throw in the fact that the reality is Europe's in the middle of a world war, just exasperating the problem. You've got a pandemic that's still, the reality is, running around the world and still mutating situation. Those are all things that potentially could go very bullish to commodities or very bearish to the commodities. So, there's a lot of tools out there that allow you to make sure your profitability is there, but also be able to play that game in case of the what if, because there are some bullish what ifs out there. But that's what people tend to concentrate on. I want to encourage you to unfortunately say, but what if I'm wrong? It's easy to be excited if you're right, but what happens if you're wrong? Our group is trying to encourage people to look at that profitability and make sure that you don't let those profits slip in 2023.
Well, Jim, always great conversation, and enjoy the time with you here on the show. Any final thoughts you have for us before we wrap it up for today?
Well, I'm just going to wish everybody a Merry Christmas and a happy holiday season. Like I said, folks, put your wish orders in. Is my best advice right now, and be prepared for volatility, but really take a very serious approach as you sit down and start analyzing where your profitability is for this year's crop, as well as next year. If you need any help with doing that, please call any of the agmarket.net team members at 844-6758. If you would like to, we are having a conference in Nashville. I know Jesse's going to be there back there at the first weekend of February. If you're interested in finding out more information about that, where we're going to kind of give you an idea how to market and how to build some marketing plans, go to agmarket.net. At the top of the page, it'll give you some information about our conference.
Looking forward to that conference as well. And again, all the details, agmarket.net. With that, Jim McCormick, always a pleasure, sir. I wish you a Merry Christmas, Happy Holiday season as well. Have a great weekend. We'll talk to you again soon.
Thank you again for having me on, Jesse.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.